Here you go, Apple Computer on the opening bell, hitting 587.90, down 16 handles. Guess what? They manipulated the stock. They did everything that they could with it. They report earnings this week. Once again, the calls are inflated still. They should be another $5 taken out of these. We'll wait and we'll go on sell. Here's that $600 call. That's still extremely high in price. Only down $7. That doesn't cut the mustard. On this opening bell, MMTs, we're letting it open up. We've been open for 13 minutes. And we're going to watch how these lows and how their bounces have taken place. But when they bounce, you have to be a seller immediately upon your transactions. Because one of the things that we're going to be featuring is the fear indicators and how markets can sell down just like they went up and all of this austerity stuff. Hey, it happens. We're in the middle of earnings season, which is good, and how you can profit from it. We're right now peaking at 224 handles. We're down 70 handles on the NASDAQ comp. And as soon as the selling clears out of the way, and we're coming right back to that 1333 is going to be that where they're even on the calendar year. Remember that the bull got back in charge and the bear was not there, but now that you're getting these haircuts here, we're going to see what these markets are about, because if they're going to get QE3, stock prices during his earnings must go much lower. Otherwise, Mr. Bernanke will not issue the welfare check. As the selling increases on the Dow and the NASDAQ comp in the opening bell is how you go hunting and you find the best of the breed. Google is living up to its expectations off of the bottom. It's got its earnings out of the way. There isn't that much volatility. Yes, resistance levels will be resistance levels and support levels. We're going to define them now that it reported earnings a couple of days ago, and that's out of the way. But when they come up there and they hit the highs, here's the 610 put. That was at $12. They took it to $16.50, $17.70. Here's a 625 put that we owned. That's up $7.50. Because that was the upper end of where that resistance level was, where you could trade that put side. And you can see the increased selling on this opening bell as the bull gets washed within the volatility cycle, the manipulation cycle. We do not have a high growth environment because we don't. And this is what ends up happening. The market will always catch up to growth outside of price volatility. Price volatility is to be traded. Does it hold when it's a manipulative way? No. But this broader market will catch up to where the growth is. And here are the numbers right here. Right here. Okay? So, MMTs, welcome to the wonderful world of opportunity on the opening bell. And not only that, I've got some prices. They hit $6. They went to $9.90 on the high. They're at $8 on the call side. The put options that we'll be taking a look at is we're already making enough money on a 620 and a 625. So here, let's just go over and figure out where the new trend channels and the calls and puts are on it. So in this case now it's going to be a 605 put. That's up $4 from $391. And resistance at 605.55 MMT. The $600 put, which I have here, I will be monitoring it as they peaked to 780 and are going to come back down. They close at 260. Here's the 605 at the resistance channel. 511,000 shares isn't too bad a volume, I guess, on this name in the first 15 minutes, 20 minutes of the opening bell. The lows that this name is trying to put in is 223 on Apple. Price line short is working very nicely. A lot of more downside to go here. Another $50, $60, $70. It'll come clear to you. Chipotle Mexican Grill coming down to 301. Made a lower low. Held that low. We'll deal with that. That's one of our big shorts right here for you Chipotle Mexican Grill lovers. You bull lovers are getting woodshedded because they pimped a stock. And excuse my language for saying it. It's called pump and dump. ISRG, pump and dump. Down 18 handles. Great shorts. How to profit in these overpriced, valued economic growth plays. Sorry, they're not selling as many Da Vinci units. They reported the earnings last week. The $2,500 put for 818 that got marked down to 1150 that we bought is marked up 20 handles. That's where that was so damn deflated and manipulated. This was the biggest trade of all, the 2,500 put, which just so happened to have been at the time. Well, that's when this was up at 2640. They had that up there last week, 2660 again, and the kiss goodbye. And the reversal back to the 2550, where the 2550 call, it had paid huge. But now those calls, because they're too overvalued on the indexes, are all getting taken to the woodshed, and this side of the market's getting marked up as they should. That's my update for the moment. Once again, we're going to let the selling run its course, and then we're going to go looking for what is the best value, the best support levels, and what will have short cover squeezes. It's better for equities to get marked down so that you can get a potential bull set up, because the bull needs to mark itself down to meet its growth. And the whole market needs to be marked down, and equity prices need to be marked down. As they get marked down, in the dog days of summer, 7/23/2012, and we've got Europe out of control, Spain is out of control. There are many things that the bull has to face, and you have to face these things with reality. But how do I profit on the short side when they get marked up, as MMTs have learned? They will have to come down, and you make money when they have to do this. In price volatility will increase and be here. So right now, like I said, we are 21 minutes into the opening bell, and we'll let the sellers move out of the way. And once the sellers move out of the way, then we'll be looking for the high frequency volume, where those high frequency computing cycle machines come in and buy up the market. Google had a good run on the first pass. As it pulls back and finds that support level, then we're going to go right back over here to the $600 call. And we're going to get us a trade on it. We're going to make some money with this one. And I will give limit orders out at $5.70 for now. 5.7. How to master options trading in a high frequency and volume. You finally got where you had 223 lows, and we finally got a $2 move in Apple off of the bottom. We're going to watch these bottoms, let them set up. They're very range bound from 595 to 587. And we're just going to let these things set up across the board. We have many stocks to look at. We have the earnings season to look at. We have the indexes. We bought the VIX calls, which are working. The fear indicator here, which is up $4 from 1627. I told everyone last week that they were more than complacent and you were going to have this happen. And it's only at 20. We bought up and out of the money calls on the VIX. Had to hedge a portfolio. Now we're starting to set bottoms in the price volatility channel. We will have these bottoms put in. They usually take about 30 minutes. Once the bottoms are in, then we'll take a look and see exactly how the secondary bounces off of bottoms, meaning that this one doesn't see 598. It pulls back, but then bounces, and we're going to see if they can make the higher highs within the volatility price channel, MMT.